The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Asim in Dallas.
Hi, Tom. I love your show.
Thank you so much.
I've been listening to you since 2001 from my Seattle days when you were on a little station there.
I appreciate you growling and prowling with us out here, man. Thank you. Well, listen, thanks for bringing us from Seattle to Dallas, man. Appreciate it.
Yeah. I love all the hosts. I love your show. I'm addicted to it.
It's Hotel California. It's wicked, isn't it, man? Thanks.
All right, Tom. Nice to talk to you.
Have a great one. Have a safe one.
Now, Tom O'Brien.
This is Andy Hecht filling in for the vacationing Tom O'Brien today, and I'll give my best rendition of the Tiger's growl. And welcome to the show. Tom is in Costa Rica enjoying the summer weather, and I'm here with you from sunny and hot Las Vegas. Today, right now, we have the Dow Jones Industrial Average down 74.71 points. The NASDAQ is up 3.73. The S&P 500 down 7.31. I asked the producers to play Land of Confusion, a song by Genesis, before the start of the show, because I truly believe that this summer, we're used to the summer season, where markets go into what we call the summer doldrums, because a lot of people take vacations in July and August, and certainly in Europe, where vacations tend to be much longer than they are here in the United States. People take a month off, and markets slow down, liquidity dries up, volumes go down. But we are not likely to see that this summer for a host of reasons. So we have the Dow and the S&P down a little bit today. We have the NASDAQ up just a hair. Gold is down $5.40, but it remains about $15-16 off the recent highs. Silver's down 40 cents at $19.80 an ounce, well off the $21 we saw, 21 plus we saw earlier in the week. Platinum is holding in up there at the highs, $10.92. Light sweet crude oil is going the other way. And so is copper. Copper's down 3.5 pennies today. Light sweet crude oil down $2.30 a barrel as the the EIA numbers today came in with a big draw, but a little bit lower than market analysts had forecasted. But the big news today, well, there's a lot of big news today, but the big news in the economic world today is that the ADP numbers showed that private payrolls in the U.S. increased by 172,000 in June, and that is above the forecast for a gain of 160,000. Initial filings for U.S. unemployment benefits down 254,000 in the week ended July 2nd. 269,000 were forecast. So slightly better news than expectations. Tomorrow, big numbers are coming out from the U.S. Labor Department. The forecasts are for a gain of 180,000 jobs. But remember what happened in May when the Labor Department only reported 38,000 jobs. So big day for jobs tomorrow. Tomorrow is Jobs Friday, and that could mean that it is Volatility Friday. And volatility is something we are getting used to in these markets. There's no question about it. Summer doldrums, we'll leave that for another year, because there are just so many issues out there, not just because of the Brexit, which certainly is affecting Europe at the moment, or the Chinese devaluation of their currency, which has actually taken a back seat. If you remember back in August of last year, a sudden devaluation of the Chinese currency caused the equity indexes in the U.S. and around the world to absolutely trash. But so far, the Chinese have continued to devalue their currency. They've done so this week. But we don't hear a lot about that because there are so many other pressing issues in the world. We're going to have a new government in the UK, which is going to prosecute the United Kingdom's divorce from the rest of Europe. And we have issues here in the United States, no question about it. Political issues, economic issues. The central bank here promised to raise interest rates 3 to 4 times in 2016. We are now in July, and rates remain at the same level that they were at on December the 31st of 2015. So, and that is because of the weight of economic issues. Growth is not as expected in the U.S., and the fear of contagion from Asia, from Europe, and from other areas of the world that weigh on the U.S. markets. Meanwhile, the S&P 500 and Dow, they're up slightly on the year, but they are certainly not running away on the upside. They are facing a wall of resistance in the markets, as you could probably see from this chart that I have up of the E-mini contract. Let's see if we could put that on a weekly basis. You'll see that there is a real wall of resistance up here, a real ceiling that the market has not yet broken through. And I don't think that it will break through because of all of the things that are weighing on markets here. So that's a little synopsis of what's really going on. If I look at what's happened in precious metals this year, and even in Bitcoin, not that I'm a big devotee of the Bitcoin, but Bitcoin has doubled. The price of gold has gone from $10.60 at the beginning of the year. It is $300 higher. That is a huge move. Silver has gone from under $14. We're almost at $20. We were at $21 earlier in the week. This is the same. A lot of commodities have moved higher. Hard assets are gaining more favor in markets, and it's going to be a rough road here. Now, we have this presidential election coming up. We have the conventions starting in late July. We're already in early July, and that's going to what happens in the world is that markets tend to be a reflection of politics and economics around the world. And to say that they are volatile, politics and economics around the world, would be an understatement these days. And these markets are a reflection of that. And I would reckon that many traders out there are not going to the Hamptons this summer from Wall Street. They are staying very, very close to their desks, and we shall see what happens, coming. Now, Danny from Atlanta in the Tiger's Den is asking me about a key reversal in silver this week. We've seen a lot of kind of false breakouts. Let's just look at silver on the weekly chart. No, silver on the weekly chart would have to close below $17.55 to put in a key reversal. Now, it is a reversal from the highs on Monday when we got up to $21.22.5 per ounce. But the big move came last week. So we'll have to wait and see. Now, I'm going to have with me for the rest of the show, starting in the second segment, that squeezably soft and lovable character, my brother from another mother, Mr. David White. And we're going to go through a variety of different equity markets, currency markets, bond markets, as well as commodity markets together. See if we can make any sense of all this nonsense in this land of confusion in which we live. Stay with us, folks. Dave and I will be back after this break.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
This is Andy Heck filling in for the vacationing Tom O'Brien, and today actually you have a Larry Pesavento sandwich. So you have me for this first hour of the Tom O'Brien Show. You'll have Larry coming in for the second hour. I'll be passing the baton to him at the end of this hour, and then I will be back with you at 5 p.m. Eastern Time for the Commodities Hour. We have the Dow Jones Industrial Average down about 62.5 right now. S&P 500 is down 6. Nasdaq's up about 10. Gold's down 5.10. Silver's down 40 cents. Light sweet crude oil down $2.25. And I am very happy and pleased to have with me my brother from another mother, Mr. David White. How you doing, Dave?
Absolutely fantastic.
Perfect. So, you know, I had the boys play for me at the beginning of the show a Genesis song, "The Land of Confusion," and I think that kind of sums up where we are in terms of politics, economics, and markets. What do you think?
The first thing I wanted to talk about was in that vein, and that is last night we get the not ADP numbers. Are they ADP? For crude?
API, American Petroleum Institute.
So we get those at, 4:45 generally the night before we get the EIA numbers, the government numbers for crude.
Right.
So we got those. Everybody's kind of excited about it. And we get the EIA numbers out, and not as rosy. Which one are you buying into? Is it just the latest number that's moving crude? Is the EIA number supposed to be weighted more? The ones we really want to wait for, the ones we want to put in our calculator for the model for the coming week? Who do I trust?
Well, you know, let's just look at what each one is. First of all, API is kind of an independent market-based survey, not government numbers. The EIA numbers are the Energy Department numbers. There's a lot of times that they diverge. Really, what really drives the price, Dave, in my experience, is how far they deviate from market expectations. So what we saw today is that the EIA numbers came out basically, let's see, they came out at a draw of 2.2 million barrels, but it wasn't as big as the market was expecting. And that's why the market went down. Yesterday night, they came out, they were a little bit more bullish, and they took oil up a little bit after the numbers. But, I think it tends to go back and forth. I really think that the thing that's weighing on crude oil here is not the API numbers. It ain't the EIA numbers. It's the price of gasoline. You're in the heart of driving season, and the gasoline crack spread is $12.27 per barrel. Last year at this time, it was $30 a barrel. So that's telling us one of two things. Either the inventories are too high, or the demand is too low, or perhaps a bit of both. And that's weighing, because we as consumers don't buy raw crude oil. We buy oil products. And oil products are weak. And I've thought that ever since oil was $50 a barrel, the products weren't really going with it. And if you look at stocks like Valero, they're at 52-week lows. So I think that's the story.
I was going to say, Valero kind of looked fairly interesting when it was bouncing around at 55, thought maybe it'd test that 52, 55 level, which was the low of February 8th. Kind of blew through it with volume, and that was the end of that. It's continued with kind of a couple, I wouldn't call them horribly nasty, but kind of nasty candles for the last couple of days. And that sets up two major lows from October 15th and January 15th that are down in the 42 and 43 areas. What do you think the chances of the crack spread continuing to be weak and get us down there?
Well, this thing is weaker than I ever thought it would be. Number one, gasoline is cheaper, a lot cheaper than it was 2 years ago. And I thought that the State Department's warning against travel to Europe this summer would spur a lot more people to take the domestic vacation and drive more. But that doesn't seem to be happening, or the inventories are too high. Crack spreads, Dave, they are a real-time indicator of the profitability of companies like Valero. And Valero is very gasoline intensive. So chances are, I actually had a caller, I think about 2 or 3 weeks ago, when Valero was trading around 52, who asked me, should they buy some call options, or should they buy Valero? I said, based on the crack spread, I'd avoid it here, based on the action. And based on the action in the crack spread, I'd still avoid it. It's telling you they're not making any money. So
I did see some numbers from AAA that said that more miles were driven than any other holiday weekend for going back for like 15 years.
For what, July 4th?
Yeah.
Well, that's possible. But that's huge. That just tells you.
It was huge down here in Florida. But, I don't know if it's a southern states versus northern states kind of thing. But certainly a lot of traffic. And, at least for the data that we get from like AAA and people that really don't have an axe to grind in the oil market, it seemed to me like there should have been a great deal of demand. And if the strongest weekend you're going to have in the summer can't do it.
Right. It's just telling you that inventories are massive. Don't forget, there's still a hell of a lot of oil in inventories from when those contangos were very wide. So it sits there, and then they put it through the refineries, and they make tremendous amounts of gasoline, heating oil, distillates, jet fuel, and all of these things. It just translates into that. So, running at big capacity, at close to maximum capacity for a couple of months, you create a tremendous amount of gasoline going into the season. And gasoline demand can be at highs, but it's not high enough to soak up the inventories. And listen, we're already halfway through driving season now.
There was a lot of rumors and pseudo news, but it seems to have been backed up. No one's really saying it's not true. And that was that China has filled up all its strategic petroleum, and they don't have any actual anywhere to put any more.
That doesn't surprise me. That doesn't surprise me. And that's bearish for crude oil. Listen, my range for crude oil was like 45 to 55. I lowered it this week to 40 to 50. I think we're going to go back down and test that 43 level, maybe even lower. 52 was a good high for oil for now, based on, what we're seeing and the uncertainty in the world. And The interesting thing about oil, just to kind of finish this up, was that, rig counts have come down dramatically. But the rigs that they took out of operation are those vertical drilling rigs, right? The ones that only drill one well. They still have lots of these horizontal rigs operating. They're so much more efficient, so much more productive. They drill 20 to 30 wells. So that's why production hasn't come down as dramatically as the rig counts would have implied.
So it's the efficiency of the well, not so many, not so
Exactly.
much just
Production
the count.
cost. Exactly. And that lowers production cost and makes us more, in sync with, what they're doing over there in the OPEC countries. So, hey, we're not producing 9 million barrels a day anymore. We're in the 8s, but you know what? That could stay pretty consistent, even if the price of oil drops, as we saw it go to $26. Anyway, so we're coming up to the next break, and Dave, I think, is going to stay with me for a couple of segments today. We're gonna plow through. Maybe we'll talk about currencies and stocks in the next segment. How's that sound to you?
It sounds good. Maybe a little CMG, because I
like
got
that.
a
We definitely got.
I got a compliment for you.
Okay, stay with us,
Okay.
folks. Dave and Andy coming back at you.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. This is Andy Hecht and Dave White filling those big shoes of Tom O'Brien, who is vacationing. It actually takes 2 of us to fill Tom's shoes. The Dow is down 61 plus. The NASDAQ is up about 11, and the S&P 500 is down 5.22 points right here. Gold's down 5.60, silver down 40 cents, light sweet crude oil at the moment down $2.28 per barrel. So, David, we're going to talk about Chipotle. I guess you can hit it.
Yeah, okay. Well, maybe we will.
There you go. So
there we go.
Is that a comment? Is that a comment on the price of the stock or the quality of the food?
Gastrointestinal index. I saw something that was very interesting this morning. I talked about it in the last hour. That was a article about how one tweet from the author, the screenplay writer of The Next Born Identity, had to go to the hospital, and CMG opens up 3.5% lower this morning yet again. But I was going to say, very interesting. You wrote 2 articles. A lot of people don't know that I make a lot of snide comments that end up being the title of your articles.
I love it. That's David's my titular expert.
But you kind of hit on exactly what the New York Times and many other people started echoing this morning, and that was reputation is everything. I started seeing that in about 3 or 4 articles this morning, and I figure that basically what you said almost a year ago now is coming up in those Seeking Alpha articles where you said, basically we started talking about that whole issue. But kind of a congrats. I think you've kind of set the discourse on what CMG is about right now. I think it hit your level for where you thought it was going to go.
Yeah, I actually lowered my level in my latest article. My last article on CMG was on June 20th, and I said CMG continues to dry heave. I think you actually helped me with that one. It sounds like a Dave White special.
If it was horribly snide and sarcastic, it's me.
All right, so to keep the theme from your show going, where you quoted that one of my favorite philosophers of all time, Yogi Berra, he once said you can observe a lot by watching. So I have a Chipotle, which is probably about 6 blocks away from where my house is here in Vegas. And I used to drive by there at lunchtime all the time. And actually, I would go in once in a while before all this this craziness started. I haven't been in since. And there was always a very long line. And, taking Yogi in mind, I have noticed that for the past year, there is rarely more than one person at the register, if that, in the Chipotle. So Chipotle, to me, has just become another fast food restaurant where there are so many choices. And Chipotle always marketed themselves, Dave, as a healthy choice. They might be using healthy ingredients, but if they're making you sick, people aren't going to go.
The question I have is, of course, the huge heat in the West, especially in California, where they get a huge amount of their avocados and lettuce and tomatoes and everything else.
Celery.
Got to be moving the price up. I'm looking at this chart right now on Chipotle and seeing it, it could break either way here. I'm just wondering what's your forecast for the produce department and prices with all the stuff we've seen in California. Is the crops from South America maybe bringing us some Zika flies with it gonna be enough?
I got to tell you, you know what I'm going to look at here? I'm going to look at the one market that I hate to trade, but it's telling me a lot. I'm going to look at frozen concentrated orange juice, because frozen concentrated orange juice, oranges, everyone associates oranges with Florida, but Brazil is actually the world's leader, and they produce a lot of other produce, and California is a big producer of oranges, and they produce a lot of other produce. So what has orange juice done? It's moved, Dave, from about $1.25 per pound at the end of April all the way up to $1.85 a pound today. That's the highest price since 2012. And we can interpolate that into poor growing conditions for oranges and other produce. So you're going to not only see Chipotle is battling 2 difficult things here. Number one, lower demand for their product because of the intestinal index, and number 2, higher prices for their inputs. So prices, they're going to have to raise prices to stay competitive.
You kind of wonder about that. I know there are a lot of would-be people that went public shortly after Chipotle really started having its run, thinking that, well, this is the time to get in. It probably was. Most of those IPOs have done rather poorly compared to Chipotle. You always have the incumbent position when you start off and you're the big man on campus.
Right.
I guess the next thing when you look at these charts is just how much farther Chipotle could go on lower prices. And, right here you've got kind of fairly decent support that goes back to 2013. And much past that, you break down. There's some gaps all the way down to about 320. But the next major long-term low takes back to 233.82. You really don't like that this did go and break the January 12th low on about the same amount of volume. You would have, it would have been nice to have a clear signal.
Right. So let's bring some other fundamentals into that, Dave. You have the price to earnings ratio of Chipotle at about 37 times earnings, which is about 11 times greater than the average CAPE ratio for this whole S&P 500 is around 26 times earnings, and it's also expensive relative to other fast food concerns. So it's not a cheap stock here, even at the current depressed level of what is it? Let's just take a quick look at where it is at 390, below 400. I think if we break 384, we could be looking at 300 pretty quickly.
Yeah, that's interesting. You want to talk technology for the last minute here in this segment?
Sure, absolutely.
I know you live in Las Vegas. Do you hear much about Tesla and their plant out there? Is that on the news? Is it part of the zeitgeist of what's going on? Do you see lots of Teslas in the street now?
I do see Teslas. But in Vegas, we see like all of the hot cars. We see Ferraris and Lamborghinis and Bentleys, and there are Teslas, and I've seen more and more Teslas. But the news is more concentrated on the gambling industry than it is on Elon Musk these days. But I saw a very interesting article today about his technology about transporting things that he was doing with the Russians, which is aside from the battery-operated cars. It's not as much as I thought it would be.
Okay. I was just wondering, you got to figure that they're at least a big employer around there off the strip.
Yes.
And where there aren't a lot of other businesses to be had, unless you're feeding back into the gaming industry already. I just wondered how that worked going out there. I know
not as much as I would have expected. Certainly,
I'm wondering if that doesn't change when they actually start hiring people and making that plant produce something. So
it probably will. Stay with me, Dave.
6 months behind.
We have a lot more to talk about. Stay with us, folks. We'll be back after this break.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Andy Hecht here with Dave White, taking you through the first hour of the Tom O'Brien Show today, and Larry Pesavento will follow. And then I'll be back at 5 p.m. with the Commodities Hour. We have the Dow is down 25 points coming up to the close. NASDAQ's up 18. S&P 500 is down 1 3/4 points. Seems like there's a little rally going on here at the end of the day in stocks leading up to tomorrow's big jobs report. Gold's down $6. Silver's down 40 cents. And light sweet crude oil down 2 1/4 on the day. So, Dave, you want to talk metals?
I do. COA kicks off the earnings season on Monday after the bell. This thing's been doing nothing but going sideways since it hit its last major low on May 19th at $8.78. It's building cause if you're up from north to do something.
If you eat con.
If you eat con. It's building cause, it's building steam, but for the life of me, I'm trying to put together some of these things. I'm figuring that if iron ore was doing better, then Alcoa has to do better too. What's iron ore doing? And can that tell me anything about Alcoa?
Iron ore's $50 a ton. It's been flatlining, for the last couple of weeks, but it's still holding. Got up to 62 or so. It's pulled back, but it was, in January, it was down to $34 a ton. To me, Alcoa is a paradox wrapped inside an enigma, or an enigma wrapped inside a paradox, so however you want to say it. You got aluminum, Dave, that it was up in the second quarter 9.5%. The price of aluminum rallied 9.5%. Year to date, it's up 8.6%. Alcoa closed 2015 at $9.87 a share, and it's now at what, $9.34, $9.32? I don't understand it. Alcoa also cut back on some of their production, as have some other big aluminum producers. They've gotten rid of some high-cost production. I would have thought that this stock should have done better on a percentage basis than aluminum. Look at what we've seen in gold mining, where the stocks have powered forward and put up multiples of returns compared to the price of gold. But in the base metal sector, in aluminum, you're not seeing that. So perhaps you're seeing some Russian dumping in the markets. Something is affecting this. This is a divergence, in my opinion, in the aluminum, in Alcoa, which is, a massive producer of the metal.
Well, that goes along because I thought maybe there would be a big opportunity to buy some of these bulk shippers, and I actually had it in my newsletter. We made some big money on them when they had a nice little pop.
Yes.
But since then, they've done nothing but look worse and worse. But when we talk about divergence, I go back to the Baltic Dry Index, and this thing was 200, now it's 680, and it doesn't seem to change any prospects for these bulk shippers.
No, it doesn't.
Who should have seen a lot of ships retired, a lot of this capability go to the sidelines, and start seeing at least some of these things come off the floor. So they're not doing it. So
well, the rates are going up. But you know what's interesting? You know what I think could be feeding into this? You know, in June last month, you had the opening of the new locks at the Panama Canal. So now the transit time is lower, which means that it takes less time. It's cheaper to ship stuff, which means that the ships are might be getting, you know, less revenue, as the transit time from let's say a New York port to China has been cut for the ships that can fit through the canal, the bigger ships, by 11 days. Maybe that's weighing on the sector.
You would think, but then you would just think that it's just shifting money from one place to another, maybe lower overall revenues, but that probably should have been picked up in higher demand and more ships. And we're really not seeing either one of those when you talk to the bulk dry shippers. So
right.
Prices are going up. Volume, at least in tons, is not.
Mm-hmm.
So that goes right back to the whole idea is, you know, China, kind of the control rods of the nuclear reactor of high demand for raw materials. Have they just, we talked about it at the very beginning, they filled up everything they needed in oil, at least that's the rumor. Is it possible that they have everything they need in iron ore and everything else? And it's just not, we're never going to see the kind of volumes. Did we get peak iron ore?
Well, we're certainly seeing it in copper, because copper is one metal that hasn't gone along with the other commodities. Iron ore has gone along. I mean, the thing did rally, you know, substantially from the lows. Steel, you know, the building. China's going to continue to build. They're still growing at what, 6.5%. That this country with 1.3 billion people is going to still need to consume commodities. But certain commodities, I think that they are overstocked with, you know, overstock.com.
I was wondering if they could be overstocked, according to their press releases and everything else from the Chi-Coms over there. They've been over here in the United States for a while, and the thing that they're most impressed with is the big highway system, our interstate highway system, and they're building basically the equivalent of that out in the next couple of years. So I was thinking maybe, you know, for bridges and other things like that, a great deal of it is concrete, so you don't need that, but you do need, you know, Caterpillar bulldozers, you do need some other stuff, but you probably need a lot of reinforcing steel for
yes.
concrete roads. You need that for bridges. You need that for building Caterpillar big dump trucks. And so far, I haven't really seen that.
Well, you know what, Dave? That segues really well into the whole subject of central banks. Because one of the things that the central banks have been telling us, the big, you know, the Mario Draghi, Janet Yellen, they've all been saying, listen, we've tried this monetary policy, this accommodation now since 2008. And, you know, it's helped stabilize things, but it is not igniting economies. And they're turning to the legislators of the world to saying, hey, we need fiscal policy. We need projects to put people back to work, to spur growth. And maybe at some point, that big projects to rebuild roads, to build perhaps a wall, depending upon who becomes president, and all these kinds of things, these civil projects could start to require more raw materials, not just in China, but around the world, because you certainly need those projects in Europe and the U.S. to really get the economy going again.
Well, when you look at that, you know, I look at Chicago Bridge and Iron Company, which is kind of critical to roads and bridges. We've kind of talked about whether one candidate wins or another. One, probably a big builder, would be more likely to get into bigger construction projects. I really don't see it yet in Chicago Bridge and Iron yet. CBI is the symbol on that.
No, you might see a lot of volatility in that stock coming up to the election, especially if it's close.
Yeah, normally things start heating up about September. People get back from the Memorial weekend, Labor Day weekend.
I think things are going to start heating up around the convention time, because I think that these conventions are going to be like no others we have seen. Can you hang out for the last segment?
Yeah.
Okay, excellent. This is Andy Hecht with my brother from another mother, Mr. David White, and we will be right back with you to talk a little bit more and wrap up the show and hand it over to Larry Pesavento after these words.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Coming up to the close of those equity markets, we have the S&P 500 just below flat, down 224. Dow is down 33.8, but the Nasdaq's up 17. Gold's down $6.50. Silver down 45 cents. Light sweet crude oil down $2.25, and all these markets are waiting for tomorrow's big job numbers. And we are talking here with Dave White, the squeezably soft and lovable Dave White. And Dave was telling me between the break that he got to meet Bryan Cranston at a movie premiere last night. Bryan is the actor from Breaking Bad. That must have been exciting for you. Actually, it must have been exciting for him.
Yeah, he didn't know who I was, of course. But, they did let you shake. He did have a little line. You could shake hands with him.
Very nice.
Movie's very good, and it was filmed here in Tampa, so they had the premiere come out. But I loved him in Breaking Bad, and that was worth the price of admission. The movie was very good, and somewhat predictable script, but certainly he added a great deal to it. So I think it would be well worth going to. But Anyway,
will check it out.
I had my little place in the sun last night down here. It was interesting.
Awesome.
I wanted to talk to you about something you were IMing me about earlier, and that's the debasement of currency.
Yes.
And it almost is unfathomable to me that the dollar is moving in the way that it is without massive amounts of man behind the curtain action. Can we call it that? Central bank
intervention.
Well, not only that, but Treasury.
Yes.
I don't think it's down to just the FOMC. I think it's certainly we've got a concert now with the piccolo and the flute section and the basses and the brass section over to the left, where literally they're doing everything in concert. But it seems like the control rods, when you do correlation studies, are certainly, for me, are the dollar index.
Yes, absolutely. And you know what? I'll tell you, the one thing they might be moving, when we think of, the thing for me is, Dave, when we look at currencies, we are trained to look at currencies against one another. We're trained to look at the dollar versus the euro, the dollar versus the pound, the dollar versus the yen, the dollar versus the A dollar, the ruble, whatever, the Brazilian real. We're trained to do that. And the central banks manage those differences. But if we look at the dollar and all other currencies against commodities, against gold, against silver, lately, even against Bitcoin, it's telling us something very important. Now, I'm not a Bitcoin devotee in any way, shape, or form. I do like the blockchain technology. I think it's very interesting for Wall Street. But I think that what gold has done this year is a real statement on the value of paper money that depends only on the full faith and credit of the governments that print it. And that's what I think is really important to realize in these markets.
I've always said Bitcoin is a great currency, except that it doesn't have an army that will kill you.
Right. This is true. This is true. But gold, hey, gold's been around for millennia, and it's been currency. It's a commodity. It's a currency, and all the central banks hold it. And when they declare their holdings, they declare them as part of their foreign currency reserves. So that validates gold's role from a central bank perspective. And this year, I bet they're pretty sorry that they do that, because it's making the paper currencies look mighty ugly. The ugliest girls in the class. Gold is the prettiest girl.
What are you going to talk about tonight in your show at 5 o'clock?
Oh, I'm going to run through all the commodities, sector by sector, commodity by commodity. And Dave, this is my last show tonight for the next 2 weeks, because I'm running off to get married.
Well, it's eventually, at some age, you have to get married.
Exactly.
Okay.
Exactly. Well, thank you so much for being with me for this hour. And folks, stick around, because Larry Pesavento is coming up to take you through the next hour. I'm going to rest my voice, and I'll be back with you at 5 p.m. Thanks, Dave.
You're welcome.
Have a great night, folks.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Kevin in Orlando. Hey, Kevin, what's going on?
Hey, I'm doing great. I am addicted to TFNN.
We appreciate you growling and prowling with us out here. It's a great network, man. And I want to thank everyone out there, for making it a great network.
Well, it's great because I do outside sales, so I get to have the station on my phone the whole day. And when I go pick up the kids from school at 3 o'clock, they all love it and giving the old row. Educating the kids at a young age is a good thing.
Now, Tom O'Brien.
Okay, looking good, Billy Ray. Feeling good, Lewis. Unfortunately, you'll never believe it, but this is not Tom O'Brien. This is Larry Pesavento setting in for the master himself. This is like trying to follow Johnny Carson, boys and girls, so I'm going to do my best. We're going to have Norm Winsky on at the break here in about a half an hour. We don't get to hear him on Chom's show very often, but he's very, very good. And also, I want to mention for the last 2 days, remember we had Shane Smolian on from wolftrader.net on Tuesday giving us the actually he came, excuse me, let's make that a correction. He came in on Tuesday and he gave us the highs and lows for both Wednesday and Thursday, folks. It was really amazing what he did. He said that at 10:30, that is when the Fed acts, we made our low on Wednesday at 10:30. We made our high today at 10:15. So these numbers you certainly should watch. That's 1 hour after the opening, but they've been spot on. And this is really good information. We're fortunate to have guests like we have, which give us a great deal of information. Now, the chart that I've had an email request from one of Tom's listeners is the chart of Deutsche Bank. I've posted it in here going back over the past several years. As you can see, it's been in an extended downtrend. It's making new lows every day. We just had a rally up to $18 a share, and now we're testing $12 a share in just a matter, down 33% in just a matter of a few days here. This stock looks like it's heading for Lehman Brothers territory, boys and girls. When it was at $22 a share, it certainly looked like the Lehman Brothers chart from 2008. Remember that Deutsche Bank is the largest bank in Europe. It's the benchmark of the German banking system. They are not going to let that bank go to zero. I shouldn't say that, but I would not think, given the pride that the German people have, they will do something to bail that bank out. Because I've heard this phrase before, too big to fail, and it'll probably be the same over there. But the price objective on this ABCT pattern is minus $3 a share, and we're trading at 12 right now. And I can remember Jim Cramer's show back in 2008, because I had a friend that was involved in Lehman Brothers that was afraid of what was going to happen, and it did. Fortunately, he was able to pick up some puts and salvage about 25% of his retirement, even though the rest of the firm went under. Let's get back to the Deutsche Bank. We don't know what's going to happen, but the prices do look like they're going to go lower. Now, we've had a request for soybeans from our good friend Danny in Atlanta. And Danny, the soybean market is beginning to look like the silver market that we had on the 4th and 5th of July this past week. We've had tremendous amounts of volatility here, and just recently, in the last 3 or 4 hours, we have broken down badly in beans, breaking below the 78% retracement. Now, we're very close to making the long-term ABCD pattern in corn. I'll use that as a reference here, because we start talking about that on Monday, and all you have to do is interpolate, because all these grains, wheat, corn, and beans, are in the same type of scenario, except for soybeans are still rather bullish. They're just making a 78% retracement of the low from early May. But the others are making new lows like we're seeing in corn, and we also saw that in wheat, where we made a beautiful, 1.618 expansion in the wheat, and it came down and rallied almost 28 cents. Fortunately, we were able to catch some of that, which was nice. But it settled here at 425, which is nothing more than a 61% retracement of the day's range from yesterday. But we'll find out what's going on. It's my personal opinion here that the key to these grain markets lies in the corn market, because corn is the largest crop that we have in the United States by far. And I think that if corn can bottom here at around this 3.43 a bushel, we came within 3 cents of that just yesterday, and it looks like we're heading down to make another new low today. So around that 3.40 level, the 3.43 level in corn is what we'd want to be watching. And remember, we're over this really strong cycle stuff that should give some really good volatility, which we're already seeing. Folks, if you would have told me Sunday night when silver hit 21.40 that it would be down on the week, I would say, you better find out what you're smoking and sell at retail, because no one would have thought that. And here we've dropped $2 a barrel, an ounce here in the last few days, and now we are trading at levels that are below where we were when we closed on Friday. But it's still early. We're having some really big volatility, and that's the $64 question of what we're looking for. But the soybeans did break down below the major support level that we had at 1340, and that's primarily what we're looking at as we walk through here. There's been virtually nothing happening in the Nasdaq. It acted beautifully all day long. It went to negative territory with about an hour to go, and then of course it came back and rallied strongly with the rest of the market. So the Nasdaq still looks pretty good. The S&P, all it did was go back and test the old highs up at that 2103 level before dropping 20 points. So not too much at that point. Starting Thursday of each week, I start to prepare what I think is going to be the key levels to talk about, in the newsletter that I do each week for my subscribers, because I try to give them an idea of some of the major things that are occurring. And of course, we're going to be looking, at the gold market and also the silver market, these tremendous moves that we've had. And in particular, I'm always a big fan of the 1.618 expansion levels. And if you'll take a look here at the level of the the Dow. I'm not used to working this late in the day. It's the level of the gold at 1377. That was our high, which was a 1.618 expansion that also completed the ABCD. I'm not sure if Basil's supposed to come in and work with Tom during this show or not. But Basil, if you're around, come on in and talk, pal, because I could use it. You're the master. And I really would like to hear from you. So I don't know if you're going to call in or not. I will have Norm on for a few minutes here a little bit later, but I do hope you'll come in and give us a short segment whenever you get a chance, because you're the reason why CNBC you're the reason why TFNN is so popular, is because he is so very good. The other guys are good too. You just listen to Andy; he was terrific. Dave is terrific. Steve Rhodes is terrific. I mean, John Logan. It's really good. It's really good to be around these things. But anyway, we'll cover some of this stuff here, and we'll get back to this a little bit. I don't sleep, Andy.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I think we have the Frank Sinatra of technical analysis on the line. Basil, are you there?
Hi, Larry. Whoa, that's something to live up to.
Try to fill those shoes, pal.
Yeah. Just don't be a reporter.
Oh boy, that's for sure. You and I both remember the old days of Johnny Carson. Probably you go back to Jack Parr and stuff, but those were wonderful times. But what amazed me today in the market was the fact that how the NASDAQ, how strong it was, given the fact that we had a weakness in the Dow and the S&P. Do you have any comments about that, or what would you like to tell our folks today?
There are a couple of things going on. I'm not sure if my charts are going to show, but let me just do a couple of things here. First of all, the Dow most recently made a top at 18,016 on the 8th of June. Now, you and I know that when you look at certain patterns, it's quite a remarkable thing. I have a theory about it. We won't go into it now. But the way a trend line is formed, the trend line can go on sometimes for months, for years, sometimes just for minutes. But when a trend line forms, it's incredible how sometimes the price goes right to the door but cannot get through. And that's exactly what we've seen is a very declining trend line. Maybe it's a 2-degree slope downward. And it goes from the high of the 8th of June at 18,016. Then on the 23rd of June, it's 18,011. Then on the 1st of July, it's 18,002. All of this is within an 8-point or so range, or 12-point range. But the irony is that the Dow fell all the way to 17,000. It had that Brexit 1,000-point decline and almost 1,000 points back up. And then today it tried for the fourth time to break above that 17,990s, and it couldn't. It stopped dead right at the 17,009, what was that, 82 or something, 17,984, and then pull back. I think it's going to have another attempt. Now, tomorrow is supposedly, I think there's an economic report, maybe jobs or something like that. If it's a positive, if the market perceives it as positive, and we can finally break into the 18,000s, I think that's the first really good step that we've seen in quite a while. And that'll help the weekly chart. Even if after that we have a bit of a pullback, that's fine. But just getting into the 18,000s for me is really important because it starts to improve the monthly chart a lot. But what I mentioned earlier today when I actually did the show with Tommy Jr., and I was saying that from yesterday, I've been saying to subscribers to my opening call that I think we're going to see a little transition here, and that the interest rate sensitive stocks, the rate related stocks themselves, the yields, I think there's a slight change of trend, and that would include, I thought from yesterday, that with the technique that I have, those peak Ds and Es, that there could be a pullback in gold. And so we're looking at something that, and that goes directly to your point, because over the last couple of days, we've been looking at Amazon going to testing all-time highs, did that again today. So you've now got the leadership that was failing back in July. Remember that we had you spoke about price line. Oh, congratulations. You made a fantastic call on crude oil today. That was absolutely great.
Well, don't confuse lucky with being smart.
Yeah, except you do it too often to be just lucky, huh? We know. So we're looking at the Amazon. You've got, I went through a number of them earlier in the day. So we're looking at the NASDAQ, the QQQ series, that's the Index 100. Those stocks, the leaders there, have just suddenly perked up. And you've got the IBB participating on the positive side for the first time. So I think that we have a rotation, as usual, going on. And to me, it's just real simple. You've got the same trend line that I was speaking about in the Dow that is occurring in the S&P. So for the Dow, starting to close 1 or 2 days next week in the 18,000s, I think is very positive. Support has to be at the 17,650s, and the S&P it would be really good to see the S&P in the 2113, 2115 area early next week. And I think then we're looking at having survived some important decline, having a rally going forth, and then we're going to see what the election and all that. Then getting to the other stuff, the politics of it. But I think those are the prices I'm looking at. And I will add one thing: is the VIX index. The VIX index was declining. It's at 1476. As long as you got the VIX index at 15 or below, in the 15s or below, that is buying pressure in the market. That's the way I'm looking at it. VIX jumps to 16 and a half. We start seeing the market slide.
Mm-hmm. Well, Basil, one thing I wanted to mention that I really enjoyed was your analogies of what happened, during the 20s and what we're seeing now in some of these things. I don't know if that's available to your subscribers or to public, but if the people have access to that, that's something that they really should watch, because it's really amazing how incredible these things really line up to.
Isn't it funny how I'm starting to read action that's been taken in cities or just things that you would never think of. And then I look and say the last time this was a big factor was back in the late 1920s and the 1930s. And it's just funny how these cycles just keep repeating. Doesn't mean to say we're going to go into the biggest depression or anything. It just says be aware that real estate in many areas is extremely toppy. The parallels with other eras they are marked. You could see it. And even in Boston's always been a very conservative city. 9 new skyscrapers are going to be built over the next 2 years. Skyscrapers, not just big buildings. So It's something very unusual, something to at least be aware of. Doesn't mean to say the market beforehand still couldn't go higher. I do think that the Dow is going to go to higher highs. That's my thinking, even if we have some sharp sell-offs in between.
It could certainly do that without any trouble at all, because we're so close to it. I mean, you look at the rest of the world, the emerging markets in London and the Deutsche Bank or the DAX and everything, they're really way down compared to where we are. We're right near the highs. So we could very easily do that without any trouble at all. And if the Federal Reserve decides to, push their buttons some more, we could certainly do that without any trouble at all. You have to be prepared for that, for sure.
It's like the dollar is the best currency out of all the currencies, even though it's a mix of, when you look at the euro, it's a mix of other currencies. But the dollar still seems to be stronger than most of the others. And I think that makes the United States, our stock market, the market of choice. It's going to be the market of choice, I think, for a little while longer.
Yep. That's right. The tallest man in the land of midgets. That's what they say. So who knows what's going to happen for sure. One other question I wanted to get your opinion on is the gold. What are you seeing in gold as far as, I know you mentioned a little bit earlier that there's a potential here for a correction, and that's what I'm seeing too, because of the fantastic action that we saw on the 3rd and 4th of July in silver, where it moved $23,000 in 36 hours of trading, and I was up all that time, so I was following it.
Still haven't caught up, right?
Yeah, it's still amazing. But the fact that we're down on the week now, down almost $2 an ounce from the highs, certainly means something. Hopefully this will be just great volatility going forward, which I think we're going to see.
At this point, the technical indicators for gold, as far as I'm looking at on the daily and the weekly chart, are still very strong. It doesn't mean to say you couldn't have this is what I'm thinking. I think that we see a pullback of time more than price. In other words, this is not a major decline. It means that we could go with lower highs and lower lows. And I'm suspecting 1360, somewhere between 1320 and 1300. That should be that's kind of important, but there is 1271 of the 200-period moving average in the weekly chart. It's not a big deal after the amount that we've gone. I mean, from 1050 all the way to the 1378 or something.
Sure.
And the monthly chart, this is the first time I've ever seen it in the gold continuous contract. 7 months with higher highs still in a leg A. So that is good action.
Sure is. All right, we going to stay with us, or is that it?
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, boys and girls, without further ado, we have our good friend Norm Winsky from Astro Trend going to be joining us. And also tomorrow I'll be doing the show for Tom. And I'm going to have our good friend Shane Smolian on, who predicted both of the highs and lows the last 3 days, Tuesday, Wednesday, and Thursday, spot on, using his Federal Reserve editions of quantitative easing. But let's start with our good friend Norm Winsky, and we're going to be talking about page 1 and the S&P 500. Norm, how are you?
Great. And yourself, Larry?
I'm still above ground, staying away from open graves.
Long time no talk, huh?
Yeah. Go ahead, buddy.
In case the folks don't know, I was on your morning show. So,
well, we like to have you on as often as possible because you've been spot on every time. Everybody said the first time you're wrong, that's it. You'll be toast. But so far, you're in the toaster, buddy. You're doing great. So let's start out with the stock market here on page 1 and tell us what you're looking at.
I did some charts last night for the show this morning, and we're going to look at the same charts now and see how that all worked out today. So I showed the S&P chart there, and you can see that the red line shows you is it Chapman? Is that his name?
Basil Chapman. Yes.
Basil, right?
Yeah.
He was showing the same thing that I had here, where we had this trend line topping out, across these tops here. He had the Dow Jones, I got the S&P. And it's doing pretty much the same thing. I said there wasn't much room on the upside and not much room on the downside. And we went down today and retested the green line here, my trend line, to support. And then we pretty much recovered most of the losses into the afternoon, into the close, right?
Sure. Yeah, that NASDAQ was extremely strong. It could barely get down on the day and then had a pretty good run up.
So the bottom line is pretty much the stock market is kind of trading itself into a corner here, and I have a change in trend window due here by late Friday or early Monday over the weekend, and so I think these markets, I'm just going to show you about 4 markets here, and I think we're going to have some resolution to these markets in the next 1 to 2 trading days.
You want to tell the folks what you're looking at for this July 7th and 8th area?
Well, I do planetary cycles, so we have I do one of the things I look at is the what's called a natal chart. That's when things begin, when you were born, or when something important began. So we have the U.S. begin on July the 4th, 1776. We look at where the planets were on that day, and then compare that to where the planets are today. And we have a moderate change in trend point for tonight, which indicates an emphasis on the U.S. dollar, and then also we have U.S. stocks and T-bonds. Then the big one is coming up this weekend, where we have a big lineup of Jupiter and in Virgo, and the moon's north node in Virgo, and so that would indicate several markets. Silver is one of them. I know you've been talking about silver. I talked about silver this morning. And soybeans, and that's another market. And it's kind of funny, Larry. I prepared these charts last night. I go listen to your show, the first half of your show this morning. It's like you had a telescope in your head there that you knew, you knew where the planets were and everything, and knew what I was going to talk about, because you were talking about the same markets I was going to talk about. So there you go.
That was an old adage about great minds think alike if one person's not in the room, or something like that.
Something like that, right? Yeah. So anyway, so we got a big change of trend due by Monday, and let's move ahead here now. I'm going to look at T-bonds. I picked this more because of the I don't even know what to call this. Like I said this morning, I don't even know if you could call this a generational move in the bonds. It's I don't think we've ever had this before, where the yield on these bonds have gotten so low, right? Do you know any time in history when this has happened?
Yeah, the tulip bulbs, the Florida land scandal in 1798 or something like that, and the dot-com bubble in 2000. It reminds me of this. To me, this is the biggest Ponzi scheme they've ever perpetrated on us, and there's so few people even question it. Byron Wien was on today from BlackRock, and he said, it's a Ponzi scheme. You can get anywhere you want, but that's what it is. So I don't know, but it's certainly been a straight up move.
My big picture perspective is, think about this. One of the rules of charting is, 3 drives to a top, 3 drives to a bottom. We had the internet bubble top, then we had the real estate bubble top, and now I think we have the third drive here with the government debt bubble. And I think it's a mega bubble where you had 3 bubbles within a giant bubble,
Mm-hmm.
So
well, it's going to be interesting. We're seeing incredible volatility in the metals markets, and also in the grains too. We're having, huge swings in soybeans. Soybeans in the last few hours, Norm, have moved over $5,000 a bushel. I mean, 25 cents up, 30 cents down, 15 cents up. It's really, really amazing.
I got the soybean chart coming up. Before we leave bonds, though, just notice this is textbook stuff here. We have the classic rising wedge pattern here, where the market is narrowing and going steeply higher. And you can see here we pulled back again. If you watch your morning show, Larry, you can see the green line was about 175. That's where we pulled back to, and then we came back up. So the problem with the rising wedge is, because it's narrowing, there's not much time left on this thing. It's probably a matter of another 1 to 2 trading days, and this thing's going to probably resolve. I would guess it's probably going to top out.
Norm, was it usually something of a economic nature or geopolitical? What usually causes these events to get the market to move off center, like whether it's the stock market or the soybean market or silver? Do you have, I know you believe in the astro stuff more than anything else, but is it any one particular thing that you're looking for, like a gap down or a wide range? Or
well, if you break the line, you break the trend line on a rising wedge, that's usually it. Then it's usually violent after that.
Sure.
But in terms to answer your question, my point of view is the cycles do it, and then then the scenarios are created to fit that cycle.
Yeah. Back in
'86, I'd never traded cattle before in my life, and the cycle said, my astrological cycle said, cattle had been plummeting in price, got to 50 cents a pound. and had some cycles saying that we could had an oversupply in cattle and that was going to go away. I jumped in and bought cattle, and about 2 days later, we started hearing rumors about a nuclear meltdown in the Soviet Union in a place called Chernobyl. Then they said that the European cattle were going to go in the dark, and so they were going to be off the market. You know?
Yeah, Norm, Larry, you think
I know anything at all about nuclear power plants?
I was just in Kiev, which is 60 miles from Chernobyl, and you couldn't see anything that even remembered nuclear reactors or anything like that. But I noticed that the girls looked like the boys and the boys looked like the girls. I don't know if that was because they all had mustaches or not, but it was really amazing. The European culture was so different than what I was exposed to. So, but who knows? Let's move on to to this chart on. So we've got to take a break here. I think just a second. How much time we got? Well, we only got a few seconds here, so we'll just chat about normal stuff. And we did have the new moon came in on the 5th, correct? 5th of July.
My calendar shows the 4th. If you want to look up the time for you.
No, that's not necessary because your times have been spectacular for sure. We're going to take a break here, and then we'll be right back with Norm Winsky from Astro Trend. Stay with us, Norm.
Okay.
I guess we were a little weak. We got a few seconds here. Oh, there we go. There we go.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Okay, folks, believe it or not, this is not Tom O'Brien. It's Larry Pesavento and our good friend Norm Winsky from Astro Trend. Norm, we have a request from someone in the Tiger Den to discuss the Bradley stock market model, and I've posted the one that I use, which comes directly from Bradley's book, and we are over this major time sequence that you're talking about here on the 7th and 8th of July. Can you give us your interpretation and what your experience with the Bradley has been? You have a tremendous library on the subject.
I do my own version of the Bradley. I read that book in 1971. I was thrilled to find it. That opened the door for my being able to do this. But when I looked at his parameters, I thought his parameters are too wide, so I started changing his model immediately. I didn't like his models are way too wide. I narrowed the parameters, put in some other planetary factors that he didn't have in there, and so it's evolved. I don't, only conceptually are there similarities between what I do and what Bradley does. I have my own sort of Bradley model, so if people want to contact me, we'll talk about that in a few minutes, how they can get my letter and see what I'm saying about the market here,
That's good. Now we're showing on the model that I look at. We're looking at from July to Thanksgiving. It's pretty much of a really strong trend. Is your model showing similar, or does it have more ups and downs than a straight line?
I only do 1 month at a time.
You only do 1 month at a time. Shut the front door and raise the rent. Why is it? Just to keep the risk small, or the prediction easy?
Because it's a tremendous amount of work. It takes me 2 weeks to produce my letter.
All right.
If I did more than that, I wouldn't have a life.
Yeah, well, Norm, you text me at 3:30 in the morning. I already know that we don't have lives.
There you go. Well, can you imagine if I loaded up more? Right? Let's talk about silver, if you don't mind. Let's get finish our charts here. So we're on page 3, September silver daily, and we were talking this morning how this thing had almost gone parabolic here in a few days ago, and now we're pulling back, and it broke this morning. It broke this first green line, which was the narrow channel line, and now it pulled back to the wider channel line here, and it better hold that, or we're looking at some significantly lower prices, So anyway, that's the deal on the silver there. It pulled back today to about 1950 area. Is that where it got to? 1959.
1958. That's correct. That's about the year you were born.
Okay. No, Leave It to Beaver was on TV then, right?
I can remember that very easily. The year after that, the Dodgers moved from Brooklyn to Los Angeles. Remember it well. Anyway, listen, Norm. The question that we had from one of our listeners on the soybean market. Do you look at anything coming up in the soybean market? I know you mentioned something that there was a really key day coming in here on Monday, I believe.
Yes, sir. Over the weekend. Now I just scrolled to the page 4. Where I have my soybean chart. I'm ready to talk about that. And look what we had here this morning. This is from last night. Yep. I had a line drawn here right about 10, just above 1020. I think that's just about, it was close to the low of the day, wasn't it?
1023 was the low. That's correct. In fact, when you get better at this, we'll have you on again, but you missed it by 3 cents. But it's still not open yet, so
okay,
we'll see.
So I better hold the 1020 area, or we're looking at a lot lower prices. But the key time level, gotta try again. The key time window is over the weekend here, right? And we could stretch it into Monday's opening, but not much past that. So if this thing's going to make a low, it better make it by Monday morning.
Okay, this makes very, very good sense. I hope that's what the person was interested in when they asked that question. We'll see if that's going on. Norm, we've got a few minutes here before we go to the final break, but could you tell the folks, I'm going to put up here a little bit of your information that you have for us, and I'd like for you to tell the folks how to reach you and some of the free things that you give out, because it's really valuable, and you become a real stallmate here in the TFNN. So we love you. Just tell us what you can do for the folks.
All right. Well, since we might be talking to a different audience here, I don't know, with the Tom's people, they may not know me. So I have about 40. Oh, actually, I started studying the stock market when I was 15. That was 1966. So I got about 50 years studying the stock market. And then during college, I started trading. And then I went to the CBOE in 1975 and later the Board of Trade. And so I got a little bit of experience. And so, I've been doing this stuff my entire adult life, So I've studied Astro, GAN, Elliott wave, cycles, fractals, Fibonacci. So what I offer here is I have a monthly letter I've been doing for about 38 years, and monthly letter, and you can get that for free. And it comes with a 4-hour class where I'm going to teach you all these techniques and what's in my letter and how you can benefit from my letter. And I think you'll find it's a great way. I have a very good batting average, by the way. Last month I just did the numbers the other night. I think I was about 75% overall for all the markets for my June forecast. And so
you've been spot on 70% for over a year, because I remember we had you on in early May of last year, and then the market topped on May 19th. That's when you made your big call, when we had Mercury going retrograde at the new moon, and since that time you've been flat out spot on. So if
we haven't taken out that level since.
No, sir, we have not. Plus that, but you had the low in January and also the low in February. These were, people remind me of these things. So you're doing a great job. I think think you should keep it up. And like we say, the first time you're wrong, you'll be relegated to the history books. But that's just the way it is in investing. It's like the restaurant business. You're only as good as your last meal, as you can see with Chipotle Mexican Grill.
There you go. What have you done for me lately, right?
Yeah, what have you done for me lately?
There you go. So anyway, so if the folks would contact me, there's 3 ways you can contact me. I'm in sunny Florida, so you can call me on my landline at 239-594-3939. That's 239-594-3939. If you do call me, you'll either get my answer machine, and I'll call you right back, or you'll get me. I don't have any secretary, no staff, no bureaucracy here, so you'll talk directly with me. And then we have if you're overseas, you can call me on Skype, or you can call me in the U.S. if you like Skype, norm.winski, and my email is nwinski, nwinski, at embark, embarqmail.com.
Okay, we have a question from someone. And how did you relate this market compared to what we had in the dot-com bubble of 2000 that topped in March of 2000? Any comparisons between what we have now and what we're seeing then?
Yeah, I think computers are now spelled BONDS.
Bonds. I see the same thing, but Norm, we're the only two, buddy. We're out here all by ourselves, 2 boys from Terre Haute, Indiana, trying to survive.
I guess we got Mr. Wien on board too, right?
Yeah, Byron's in there. Yeah, he was surprised. He actually called it the P word, Ponzi. So I don't know, but it's certainly, why would anybody, give people money to keep your money in the bank? Why not just bury it in a mattress, for God's sake? I don't understand that at all. That just doesn't make any sense.
Think about locking up your money for 30 years at 2%. That's crazy.
Yes. Yeah.
Right?
Yeah, it reminds me, an old story with Ernie Banks, but it's really amazing that people keep doing it. And not only that, but countries that couldn't borrow, Spain, interest rates. Stay with us. Okay?
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Okay, we're back, folks, and we have our friend Norm Winsky from AstroTrend. Norm, I have a question for one of our listeners from, actually, it's all the way from Munich, Germany. He's asking, where would you put your money right now, Norm? Of course, Norm's got a lot of money. So, what would you put part of your money, Norm, right now, if someone had to put a knife to your head or something like that? What would you be doing?
That's not in my way of thinking. I'm a trader, so...
I understand you're shorter term, but, if you had to place something, under a tree or under a mattress, what would you look at?
I really don't know how. I have to know the person and what their risk tolerance is, and I'm not like an investment advisor. I'm a trading advisor. I help people who are trading. I am helping people who are trading, almost every day, so... So I'm not in the mattress business, right?
Well, I guess this will be the last time we'll have you on here. No, I'm just
sorry.
But the person asked the question. I thought you would tell them to put it into gold bars or build a a silver bridge or something across something like that.
It can go up and it can go down. So gold
bars.
Whoa!
Repeat that. It can go up and it can go down.
Yeah.
Shut the front door and raise the rent. I think you're onto something, buddy.
Yeah, remember when they said real estate could never go down? Remember that one?
Oh, I remember the Florida land bubble. If you remember the South Sea Island bubble, there's been so many of them, and I'm sure we have another one going in London and other places.
When I do my class, I talk about South Seas and the Mississippi Bowl. Did you know those two occurred almost simultaneously between two countries that were at war with each other? They hated each other, weren't talking to each other?
Yep. Yeah, it was all psycho-related, I'm sure of that. But, you stop and think of what real estate costs in Hong Kong and in London and other places. I mean, it's absolutely, beautiful places to live, of course. But, when you have to pay, $10,000, $20,000 a square foot, that's a little bit pricey for most people, I think. So anyway, listen, let's get back to the Monday. Monday's going to be a key date, correct?
Yes, sir. Remember the Mamas and Papas, Monday?
Oh, there you go, Michelle Phillips. I certainly do. I remember meeting her once at
Oh, did you?
Hollywood. Yeah, she's really lovely. Very funny too. She's just very, very friendly. Anyway, Norm. So what we're looking at Monday, if we have a big gap down or a big gap up, that'll be a lot of information for you.
Yeah, or if it's if you're talking about the beans, if they hold support here, then you might be looking at a good low, and you got a good risk situation there, and that you know what your risk is. If it goes, much more than maybe 10 cents below the support there, you get out, right? Take your risk, or these beans, if they turn around, who knows? They could go back, they can drop 50 cents a day, so you risk maybe 10 cents to make 50 cents or a dollar, right?
Yeah, for sure. Well, listen, I want to thank you for being on, my friend. And whenever you want to come on to give us some free trades and some non-losers, you just give us a call, okay? We love you, Norm. You stay the same, buddy. Don't ever change, okay?
Well, you're the best, Larry. I'll tell you that.
No, I'm playing second fiddle to you, pal. You're the best. We enjoy you. In fact, I've had so many great guests on here. We're going to have a real special guest on Monday, folks. I'm going to have Ed Dobson from Traders Press, one of my old friends from 50 years ago. Boy, he's got stories that'll keep us going forever. But Ed Dobson will be on Monday at 9:30. And then tomorrow I'm going to be covering for the show tomorrow for Tom, because he's still out on one of his yachts out there in the Costa Rica or wherever it is. We'll be covering that. But Norm, thank you very, very much. And I hope the folks that have an interest in astrology, will contact you, because that free makes it a very good money back guarantee, doesn't it?
Absolutely. It's all free with a money back guarantee. If they mention your name, it's double your money back guarantee.
And if I was in Terre Haute tonight, I'd take you down to Louise's restaurant if it still existed, but it doesn't. So,
Okay.
I appreciate you having you on. Stay cool down there.
All right. Thanks a lot, Larry. Everybody have a great day.